Oh, good evening, everyone. My name is Aquania Escarne. I am the creator and founder of The Purpose of Money, a platform that teaches women how to build wealth through life insurance and real estate investing. We also are a full comprehensive firm that can help you with future financial planning and all things money. And today we are going to talk about how I have personally leveraged retirement funds to invest in multiple opportunities, real estate, small businesses, passive income earning opportunities, and so much more. And that is just a tip of the iceberg. For those of you who are on my email list, you might have gotten an email that shared some of the journey that I've had in this whole real estate world, but also just becoming a multifaceted entrepreneur. And today we are joined by a special guest named Joel Landon from one of my partner organizations. He's going to talk to you about this actual vehicle that I use to invest. But we are going to first bring life to my story, right? Because I want you guys to be able to replicate my success in the same way possible from start to finish, okay? So we are going to make sure that in today's webinar, we outline the steps that you need to take and how exactly this can be very beneficial to you if you are someone who is looking to really leverage all the money that you have working for you. I'm going to share a little bit of my experience. Joe's going to share his expertise as well. And between the two of us, you'll start to have a vision of what you want your future to look like. So without further ado, please know this will be interactive, engaging, and I love to see faces. So if you're able to be on camera, you are welcome to be on camera. But if you are not, that is okay. The only thing I ask is that you keep yourself on mute so we minimize background noise, unless you have a question and we are at a point where we are asking you to ask your questions, okay? But we are recording this, and those who are in the room will get a copy of the recording within 24 hours so you can rewatch these tips. And then I have some surprises at the end, okay? I have some surprises at the end. So the first thing I want to tell you is if you stay to the end, you'll have a free opportunity to connect with me and talk strategy, okay? So you have to stay to the end though, because I'm not going to drop the link into the end. But who's ready to go ahead? We are going to be engaging, so be ready to type in the chat, even if you are not on camera. If you are ready for me to move forward, I need you to type ready in the chat because I'm ready to give you all these gems. And I just need to make sure y'all are with me because this is Thursday. This is almost Friday. And
I'm
I know
ready.
some of y'all wish it was the weekend right now.
I'm ready.
All right, all right. David is ready. David is like, I'm not gonna put in chat. I'm gonna tell you I'm ready. And I appreciate David because he showed up bright and early and we got to know each other. So David, welcome, welcome, welcome. I am so glad to have you. Anyone in the room, if you have questions, there is a reactions button at the bottom of your Zoom panel. If you want to raise your hand, you can, but I'm also open to people just coming off the mic, okay? So if you do want to speak, just give us a heads up and come off the mic and ask your questions, all right? So it is 6:06. Let's get into this. I'm ready to go. I'm going to start out by sharing my story, and then we are going to highlight how to make this happen for you, okay? So let me minimize you guys. I'll keep letting people into the room. We are going to keep letting people into the room, and we are going to present and present, all right? So let's talk about it, because I know most of you are probably thinking, if you've grown up in the world that I did prior to being the child of very independent entrepreneur mindset parents, I thought the only way to save for retirement was to work a 20 to 30-year career and to put your money into a traditional 401k. I'm an 80s baby. That's all I knew to be true. And so that's what I thought. And that's why I spent the first 15 years of my career working for the good government. I had a good government job. I was a US diplomat. I lived all over the world. in Haiti, in Dubai, United Arab Emirates, in Italy, in Ecuador, and I took my family with me. And then I realized I like to do multiple things. So let me tell you a little bit more about that. So about 2015, after 3 years living in Dubai, having another son, I have my youngest was born there. My family and I moved back to the US. And it was in 2015, I realized I had a strong passion to teach financial literacy to other people. Now, mind you, I was already very savvy. I am the girl whose dad bought her Rich Dad Poor Dad at 16 and started saving for retirement at 16 years old with my first paycheck from a retail job. So I was a cashier, and my first paycheck of $252 did not go to shopping and spending my money in the store where I worked, but went into a Roth IRA instead. And I have been building to retire early ever since. So I was already thinking saving, investing in real estate is the way to go. But when I came back to the US in 2015, I also realized that $500 was enough for most Americans to get off track on their budgets, and they didn't have savings to really help protect them in the event of emergencies. So I started savings challenges online. I started giving financial tips every day on social. And from there, I grew a business that is now RRD Investments, also known as the Purpose of Money online. And I am teaching people how to leverage their money on a day-to-day basis to build wealth and using life insurance, investing, and other ways to do so. So today I'm going to tell you a little bit more about my story, and I'm also going to tell you how you can take control of your retirement funds today. So most of you who have been following my journey since 2020 have heard the story of how I accidentally got into hotel investing during the pandemic when no one was really traveling. Funny story. But I saw an opportunity to get into an industry that had the potential to rebound very well once the pandemic was over. And by the grace of God, I may have missed the first email inviting me to invest, but I saw the second one, and I was able to leverage one of the strategies we're going to talk about today to invest in my first hotel in El Reno, Oklahoma. And I have been addicted to hotel investing ever since. But since 2020, not only have I invested in multiple hotels, I've also invested in apartment syndications, car washes, small businesses, as well as some passive investment opportunities. So we're going to talk about how the heck did I do that? Most people are asking me, how much are you investing in? And every year I have the ability, thank goodness, to say more things because I've been really leveraging the money I saved to my benefit. And so when a good deal comes along, I'm ready and able to take action. So we're going to get you into an action position as well. And then I'm going to tell you how to get started. So stay to the end so you can figure out how do you get started for you. Okay. But most people have a why, right? So I just want to know who's not shy today and who wants to tell us in the chat who's your why or what's your why. Okay. Because my why is my family, right? I knew from the very beginning, before I even had a husband and children, that I was not going to leave this world worse than I left it. I wanted it to be wealthier, abundant, and full of joy, and I wanted to have a legacy. So as a result, I made a commitment to create a legacy for my family, and specifically to create multiple streams of income, because I had read in Rich Dad Poor Dad, most millionaires have 7 streams of income or more. So I was determined to be in that number, okay? And I also realized that you don't have to just depend on one source of income, like your job, to be where you get that money. So my why is my kiddos. These are them when they were younger, because I like to remember them when they're most pure and precious. But they are a little bit older now, and they are less photogenic. So it's been very challenging to get updated photos. But this is my youngest, Dylan, born in Dubai. My husband, Rudolph, I met in college at GW. when I was at GW University. And this is my oldest, Rashad, who is an entrepreneur in the making. So what did I do? I decided to become a real estate investor. But if I'm being honest, this was also not something I did by choice, but more so by circumstance. So how many of you remember 2008? Anybody remember 2008? Anybody purchased property in 2008 or before 2008? Type yes if you remember. What happened in
Yes, I
yes,
did.
you did, right? But my husband, my dear husband, we were dating at the time. And in 2006, he had a vision that he was going to have his job, buy a house, and then propose. This was his plan. And he specifically bought at the height of the real estate market in the DMV. So he bought a townhouse condo in Largo, Maryland, which we still own today. And then he decided to propose. Again, that was his criteria. Good job, house, propose. And when he proposed, I was committed to a career in the foreign service as a diplomat. And he had decided to come with me to Dubai. So we got orders to Dubai for 2012, and we could not sell this house to save our life because the 2006 price was not the 2012 price. And so Latasha knows what I'm talking about because she said upside down mortgages. She was in high school and she remembers some of the adult conversations. So out of circumstance, out of pure necessity, we transitioned and moved ourselves and our one child at the time to Dubai, but we rented our condo with the hope that we would be able to sell it later. So we were upside down, and it was only under President Obama's administration when they changed up some of the rules that we were able to refinance at least the primary portion of the mortgage. But in 2012, we had to rent. So we became landlords because we had to. And then we lived in Dubai for 3 years. Someone else is paying the rent. And we were like, wow, this is actually a good situation because we had 3 years of someone else paying our mortgage and us still saving our mortgage as though we were paying it. So when we came back in 2015, we had a nice little nest egg to get more real estate. So what did we do? We went house hunting. So we came back to the US in 2015, and I partnered with someone to purchase a rental property in Philadelphia. But we also purchased our dream home in Virginia. And we also helped my mother-in-law purchase her retirement home because we didn't want her to keep renting. And we knew she would be retiring in the next 5 years. We were able to leverage our savings, life insurance, and retirement dollars to buy 3 properties in 1 year. And so I always tell people 2016 was our path to financial freedom. That's when we started our journey. That's when we dived into real estate. But most of y'all who have heard me talk before know that I didn't like being a landlord. And so after 2 years of toilets, tenants, and evictions, we sold the house in Philly and I got out of the landlord business for the most part. We still have our house in Maryland. It is still rented, but we are not actively pursuing individual rentals anymore. Instead, I got into hotel ownership and investing. So as I said before, in 2020, when everybody was not traveling, hotels were on sale. And so I got an email from a colleague that I'd done a podcast episode with. We were on a podcast together to talk about hotel investing. And she convinced me, because the numbers were great, to invest in a Hilton Home 2 Suites in El Reno, Oklahoma. And one of the things I still love about this investment is that it opened my eyes to the fact that you can invest in hotels as an individual. It opened my eyes to the fact that you're not just buying a hotel, you're buying a business. And most importantly, you are helping American families because our ownership allowed these employees to keep their jobs during the pandemic. We also implemented personal time off because the previous owner didn't even offer it to most of the employees unless they were higher levels. And we implemented 401k plans. Some of them had not been saving for retirement because they didn't have a vehicle at work to do so. And so under our ownership, we were able to change the trajectory of the employees' lives by providing very valuable resources they didn't have before. And because it was a pandemic and the owner had multiple hotels and was in a very tight position financially, we got this hotel at a very great price, but also inherited a lot of equity. So I want to teach you now, or Joel, my buddy Joel is going to teach you, how can you take advantage of opportunities like this when they come your way? Because this was my first hotel investment, but since then, I have invested in additional properties in Memphis, Tennessee, Indiana, and most recently in Lake Charles, Louisiana. So, and that's just hotels. But everybody doesn't have to invest the way I did. Some people will choose to invest in hotels through real estate investment trusts. You can buy them directly on some websites. You can do a direct purchase by talking to an existing owner. And you can also partner, like I did on my last deal, with other individuals who are looking to purchase the hotel with you. And then you can pursue investors to invest. So if this interests you, please stay tuned, because now we're going to hop into how do you make your money work for you, so that you can do this too. And then I have an opportunity at the end to chat with me about my next investment that I am working on right now. Okay. So without further ado, let's talk about how do you fund the deal. Most people assume that it's always your own money, and that's helpful. But there are definitely multiple ways to finance real estate. I have pretty much done them all, so I can speak to them. But the one that I love the most is the solo 401k option that Joel is going to talk about right now. So some of you may have heard of self-directed individual retirement accounts. You might have heard of refinancing your home or getting a line of credit and pulling from that money to finance a deal. And of course, you can always use cash, because cash is king. But I have found that the most beneficial way to do it, that has also led to significant tax reductions for me, or tax benefits for me, has been the EQRP. So without further ado, I'd like to bring up to the stage my co-host for this evening, Joel Landon, who is a super awesome, famous celebrity person in my world. And also someone that some of you know because you have already leveraged this strategy for yourself. But Joel, for those who don't know you, please take a second to introduce yourself, and then you could get right to it, and we're going to do it.
Sounds good. Thank you so much, Aquania. I love, first and foremost, being a part of your community. Seriously, like the energy here, the energy that you bring, it's so much fun. And I absolutely love your story. I've heard it a couple of times before, and it's motivating. And I'm confident that like everybody that's tuning in right now feels the same way. They almost feel a sense of like, I could do this too. And it's true. People can do this. Everyone here listening can do the same thing that you're doing. And so I just love hearing your story, and I love being a part of this. And, you know, like Aquania mentioned, my name is Joel Land, and I work for EQRP. I've been with EQRP for 3 years, and we're on a mission to help people out. We're on a mission to help people learn how to self-direct their retirement. And my message today really is to help illustrate a little bit about how this functions. A lot of people hear about self-directing their retirement. They might hear a story much like Aquania's or from, somebody else, and they're curious. They're curious, what does it actually mean to self-direct my retirement? And so that's what I'll talk about today. I'll go into the details, and I'll really shed some light on what it means to self-direct, why somebody would want to do it, how it's done. I'll go over some of the logistics, and then I'll even talk about like who is eligible, and then walk you through a few steps, so that if this is something you want to explore, you can go out and do it. So I'll share a few slides with everybody. Let me get this ready to roll here for y'all. And I think the first thing that I always want to start with is, what does it actually mean to self-direct your retirement? And it's pretty straightforward. The concept is much like a company-sponsored retirement plan that a lot of you have likely participated in. So whether that was a 401k or a TSP plan, maybe even just a pre-tax IRA that you made contributions to, or a Roth IRA, a lot like Aquania's when she was 16 years old. The concept functions the same, where you put money away into a retirement plan so you can take advantage of the benefits in retirement, right? You want to grow up your pre-tax money as much as possible, and then really just take the tax hit or the tax burden at retirement at a lower income bracket. Or if you're fortunate and you've converted funds or you've made after-tax contributions, now your distributions at retirement are tax-free. So again, the concept really functions a lot like the traditional retirement plans that we're all familiar with. But what's different about the retirement plan that we build for you is that you have total control over the decisions of what you want to invest in. And that's where you start to unlock the possibility of investing in assets like hotels. And we've interacted with a lot of folks from Aquania's community and her corner, and they want to get involved in hotels. They love the idea of participating in something as powerful as a hotel rather than something like stocks or bonds in the capital markets. Of course, there's a place for that in anybody's retirement portfolio, but when they start to hear the stories about getting involved in something as exciting as a hotel, they want to be a part of it. And with a self-directed retirement plan, you have the control to actually invest in those assets. So we actually structure a retirement plan for you where you are the decision maker. You're the trustee. You're the person that gets to not only benefit from all of the gains in retirement, but you're also that individual that gets to choose what you want to invest in. And we write that out in your qualified plan for you. I just want to make mention that, a good reason why people like to do this is they like to unplug from the traditional systems. And that's really what you're doing with a self-directed retirement plan. You're unplugging from that institutional structure of you put money away, you let it grow, and 30 years later, hopefully you have enough. A lot of our clients who come to us, they're looking for a way to unplug. They're looking for that method to get out of that institutional system, break free from that box, so to speak, and start exploring the opportunities that are so readily available, like investing in hotels. So I want to dive in a little bit more into the why. Why would somebody want to do this? We get a lot of people that reach out, whether it's, folks that are reaching out to Aquania, and then Aquania, introduces them to us, or maybe somebody just found us on the internet. A big reason why people get connected to us and why they actually change and do something like this, like self-directing their retirement, is because they're really just sick and tired of that traditional system. They wake up on a Monday morning, they see a huge fluctuation in the capital markets. Maybe they see their retirement portfolio go down, and they're thinking, oh my gosh, I'm tired of seeing it go down and then come up and then go down again. And there's like not a lot of predictability. They can't really feel confident enough and trust that traditional institutional system. So they're just really sick of it. And there's a lot of members that have experienced this. I think about Jeff, one of our clients, all the time. He has his architecture firm back in California, and he's in his early 50s, and he's looking at retirement, and he's thinking, what the heck? This doesn't seem like it's going to be enough for me. I've been saving all these years, and I'm ready to retire. I want to retire, and I want to maintain my lifestyle. Heck, I even want to maybe go a little bit beyond my current lifestyle and travel and enjoy some of the things that I couldn't do while I was managing my firm. But he's looking at his retirement plan and he's frustrated. He's frustrated because he can see that it's not quite enough. So he starts digging a little bit. He starts doing some research, and he starts realizing, oh, there's like far better ways to invest, even invest my retirement funds. So he finds out that he can actually invest his retirement funds in real estate. He goes to his advisor and he's asking his advisor, hey, how can I do this? Doesn't get a whole lot of direction there. So he just does more research on his own. And that's where he really gets connected to us. And Jeff's been a great client. He's a GP in a project, something that he would have never thought about doing before, if he didn't just dig a little bit deeper and maybe start looking deeper into his current retirement plan and strategy and recognizing that it was not enough. So he rolled over his funds. He's self-directing. He's in the asset classes that he wants to be in now, and he feels better about retiring when he wants to. So again, people really, they get to the point where they're just kind of sick of the traditional system. They have eligible funds. Maybe over time, they've been contributing to their company 401k or 403b, 401a, and those funds are actually accessible for them to move into a qualified plan like this. Another reason is people have tax strategies. Maybe you're looking for ways to defer some taxes. Maybe you're a small business owner and you're looking for some tax breaks for your company. The 401k that we offer our clients is such a useful tool for small business owners. They can grow their retirement. They want to enjoy retirement just like anybody else. And sometimes they miss out on the company sponsored plans that most people get to enjoy in a W-2 job. Well, a small business owner, they come to us and they say, hey, I want to enjoy retirement. I don't just want to depend on my small business. I want to put money away. So we show them how to do that. They invest in alternative assets. And at the same time, their company is benefiting from some of those tax breaks. And they're benefiting as an individual as well because they can defer some of their taxes. So that would be a good summary of why people like to self-direct their retirement. And if you're one of those persons, if you're kind of thinking to yourself, yeah, I want to do this. I want to get into the alternative asset space. I don't know where to start. I do have eligible funds from my old employer. Let's get connected. Let's talk through this even more. You're likely somebody that wants to do this and can be really successful with it. So let's talk a little bit about how it works. It's a question that comes up all the time. People find out, why they might want to do something like this. They find out what it actually means to self-direct, but they want to know, how does it actually work? Well, I kind of alluded to this initially. It really just functions like a 401k, but you get to invest in the assets that you want. So we structure a retirement plan for you. You're the trustee. We move your funds into the plan, and then we show you how you invest those funds into the qualified assets that are right in front of you. And if there aren't any right in front of you, we're going to do our very best to show you exactly where they are. And we'll even educate you on all of the unique asset classes out there that you can enjoy. So again, just to summarize, how does this work? Well, it's just a qualified plan. You're the trustee, and we give you that checkbook control. So you have that access to move funds when you want, how you want. You don't have to worry about anybody telling you when you can do it or how to do it. We'll teach you initially how to move those funds, but ultimately you're the decision maker. So you get to just depend on yourself and no third parties or custodians. So just to give everybody a little bit of an idea of what it looks like when you actually want to do something like this, I'll take a few moments here and just break it down for you, kind of walk you through what it looks like on day one if you actually wanted to self-direct your retirement. Day one, you're having that strategy call. You're sharing with someone like me your goals. You're talking through what it is you actually want to invest in. And we talk through how we can help you maximize your current retirement funds. And then, of course, we set expectations on the rollover. The rollover takes some time. That's essentially us moving funds from the current custodian or the current plan into your new self-directed retirement that we build for you. So we initiate that rollover. You're going to have an account manager that's going to walk you through this process. It could take anywhere from about 5, maybe 15 business days for something like this to go through, but we do try and work so hard to make it as effortless as possible for you. So funds go from point A to point B and then ultimately into the investment that you want. So we're your advocate. We want you to know that there's an entire team within EQRP that is dedicated to just make sure rollovers are moving forward until everything is settled. Of course, it's a non-taxable event. I don't want anybody to stress about us moving funds from one place to your new qualified plan and it creating any type of a taxable event. It doesn't. It's a qualified direct rollover. And additionally, if you're somebody that might be actually doing this with, say, a self-directed IRA, which is similar, that you can invest in alternative assets, but it's also really different because it's an IRA compared to what we offer, which is a 401k. And there's some really cool features with what we offer compared to the IRA. So I bring that up because if you do have assets that are sitting in a self-directed IRA, you can actually roll those over in kind to your EQRP plan so you can take advantage of the benefits of an EQRP plan. A few of those benefits are you can borrow from your EQRP plan personally. So if you ever had to take out a personal loan, you didn't want to do any financing with the bank, you could actually do that with your EQRP plan. You can make contributions 10 times the amount of an IRA with an EQRP plan. And then lastly, there's a UDFI exemption. That UDFI exemption is super powerful if you're somebody that invests in real estate, specifically debt financed real estate. So we have a lot of people that are navigating real estate right now, real estate investments with self-directed IRAs. And they actually give us a phone call and they say, hey, I've heard about this UDFI exemption and I need that. I don't want my gains on this investment to be taxed. And so they work with us to do an in-kind rollover and we move those assets. And before you know it, there's a big capital gain event for the client once that property sells, and they have that UDFI exemption, so they don't have to worry about the UBIT tax. I know that's a lot. It's a lot of information, a lot of details, but just know that with an EQRP plan, when you compare it side by side with a self-directed IRA, they are actually really different. The concept of investing retirement funds in alternative assets is the same, but the EQRP plan offers a ton of benefits that you're going to want to take advantage of. Lastly, we set up the bank account. We want to make sure that there is an account with a qualified bank that knows actually how to service our clients who are managing self-directed retirement funds. So we set that up for you. We make it as effortless as we can. And going forward, when you're ready to move funds, it's through that bank account that you send funds and that you receive funds from your investments. A couple of last pieces, once your rollover is done and you've moved your funds into your plan, you're ready to invest. Maybe you're ready to invest with Aquania. She's got a great fund that she's going to be raising capital for. Gosh, this is going to be the perfect opportunity for you guys to now explore her investment and move those funds into her opportunity. And we help with that along the way. So we want to let you know that even though you're self-directing, and there's a component to this where you are doing this is in your hands. We're here to support. We're here to help you out the whole way through. We want to make sure that it's as effortless as possible. So we do answer your questions. We reach out proactively to help you out. And with that being said, Aquania, I wanted to turn it back over to you. Thank you so much for letting me share some of the ins and outs of what does it actually mean to self-direct your retirement plan. And of course, always happy to answer questions that come this way.
Yes. Thank you so much, Joel. So I want to highlight a couple of things that Joel kind of skips over because he's always bragging about the EQRP, but I want to give you some practical examples so you can relate to what he's saying. So in 2021, because I have a story and sometimes I'm like, don't want to repeat too much for those who've heard it over and over, but there is value in knowing where someone's come from to see if you can learn from their experience. So to be fully transparent, in 2020, when I took money to roll over into the EQRP, I was really wanting to do apartment syndication. So for those that don't know, apartment syndications are deals where you buy a subdivision with multiple units, and you typically tend to do it with a group of investors. So there's someone who finds the opportunity, we call them the general partner, and then they have limited partners who invest and they get some of the profits, right? So essentially, when I learned about the EQRP, it was through a colleague at the State Department who buys apartment subdivisions. And she was hoping to find a really good deal. So 2020, before I even knew you could invest in hotels, I was determined to be an investor in an apartment syndication. And 2020, y'all know what happened. The pandemic happened and there was no deal to be found. And I was looking, but there was no deal to be found. But in 2021, I finally found an opportunity. It was a 354 unit deal in Orlando, Florida. And I gave them my money because I was like, this is what I've been looking for. Now I have hotel, then I have apartment syndication. I'm building my portfolio. But check this out. When I looked at the apartment syndication deal, it was a 5-year commitment, 5 years, 2021, put your money in. And just like the rents, I got paid every month. So my apartment syndication was paying investors after expenses were covered for the month, paying investors a portion of the cash flow from the asset. So anybody who wants to receive rental income but not deal with toilets and tenants, apartment syndications, real estate funds, that might be the move for you, because every month after we close, I received a portion of the rental income into my EQRP. But after 3 years, not 5, a buyer came along this summer and offered a really good price to take that syndication off our hands. And this debt, the debt tax, I'm going to call it the debt tax, that applies to self-directed investments is a real thing, because this apartment syndication had debt on it. We acquired a commercial loan to acquire the asset, and that loan was up to be refinanced, right? Or paid in full. And instead of having to refinance under this crazy market with crazy interest rates and a lot of volatility, a buyer came along and offered to buy the property. So although I had intended to be invested for 5 years, we actually got out after 3. And we made some profit, because remember, I told you I was getting paid every month, just like the people paid the rent. And then we cashed out when we sold it. So rather than having to pay a tax bill, right, I was able to get my profit and my principal, put it in the EQRP, and now I have money to invest in another opportunity. And the icing on the cake is the monthly income I received from 2021 through 2024, I also invested in other opportunities as they came up. So can you imagine having the opportunity to invest in a deal that pays monthly cash flow, then turn around and get that monthly cash flow and invest in something else? I use some of my proceeds to invest in tech startups, to invest in a car wash, which produces more monthly income. And then when we sold the syndication, and I'm not even a general partner, I was a limited partner, I got my principal investment back, plus money from the sale, and I'm not paying any taxes. And I didn't believe it at first, because I'm going to be fully transparent. This is my first deal that sold. I was planting seeds, and I expected those seeds to grow for 5 years. So I wasn't even really ready to mentally understand how this works. So I even set up a meeting with my CPA and was like, they offered us a 1031 exchange option. Should I take it? And he was like, you can, but you don't have to. He said, you can reinvest your money in 60 days or 600 days because you use the EQRP. And I was like, for real? He said, yeah, you're not on a time crunch. But when you invest your personal dollars into real estate and you're trying to avoid capital gains and you want to do a 1031 exchange, you got to do that 1031 exchange within a time limit. For those who've heard of that before, that's a way to reinvest rental income or real estate proceeds so you can avoid capital gains taxes or delay them. Delay. We don't like to say avoid. You'll pay them eventually. But I didn't have to deal with that. He said, you can choose to do another deal with them, or you could not. But either way, you don't have to pay any taxes on this money because it is in a protected retirement vehicle. Okay. And then I was like, oh, well, then I have no pressure. I can say yes, no, or who cares? Because it's my money coming back to me, and it's in my bank account, and I am able to reinvest it in whatever I like. So I really, really like that, because I know some people who have self-directed IRAs, and they are frustrated because when they have these documents come in about their proceeds and sometimes even unrealized gains, they're paying taxes on money they don't actually have, which I think is crazy. And then the other thing that's really, really important for you to understand is there's no middleman. Self-directed IRAs have custodians, they have paperwork. You have to tell somebody how you're going to spend your money before you spend your money. I just raised $2.8 million to buy a hotel. We have people doing self-directed IRAs, and the paperwork trail was almost a heart attack. I have to admit, that was my first raise where I had to deal with the paperwork, and it was a lot of paperwork to spend your own money. So in my mind, I was like, why do people do self-directed IRAs? I just don't get it. But that's what they knew, because not enough people know about this vehicle. So they got a self-directed IRA because they saw it on the internet or somebody they know, that's what they use, and that's how they decided to invest. And like Joel said, it allows you to get into the real estate deals of your choice and do alternative investing, but it's just more paperwork. It's more work and longer. If I'm being honest, those who did the self-directed IRAs probably took the full 15 days to get into the investment. And sometimes you don't have 15 days to get into an investment. But my EQRP people, Joe was like, we're going to try to do this in 3 to 5 days. There was a few people who took a little longer, but it wasn't their fault. It was the company the money's coming from. So I just want you to realize, because I didn't really get it until I got that money in my account and was like, oh, I don't have to do anything. And EQRP takes care of the tax filing, helps me take care of the tax filing, I should say. We do have annual tax forms we need to fill out, but they make it really, really easy. You fill out a type form, you tell them what you've put your money into. They're not policing it. They just need to know so they can fill out the form. And then they send it to you, and I sign it and I send it to the IRS. It's really simple. So I just want to highlight that, because some people, you don't know what I'm saying until you're going through the process. And I've even had people who said, I have a self-directed IRA, but I'm switching because I just want a better process. So we had Kiana in the chat. I love you, boo, for coming in tonight. She said she can say from firsthand experience that they did a great job onboarding her and answering all of her thousands of questions. So I'm going to drop the link in a second so you can call them and ask your questions to get set up. And Shamika, you will definitely have access to the recording. Sorry you lost power for a minute, but you will be able to rewatch these power plays whenever you're ready. But I do want to get to Kiana's question. So Kiana said, can you share how people who are not professional investors can actually make money versus losing it because they don't know what they're doing? So I'll start to answer that. And Joel, if you have anything you want to add, feel free. So I do want to make clear, this is a vehicle, okay? So just like your car gets you from point A to point B, EQRP can get you from your money into a not working for you account to a money that is working for you account. It is the vehicle that gets you from point A to point B, but it's not your investment, okay? You still need to find a physical investment that you're going to put your money into. And there's some rules about this. So for example, I can do passive real estate income opportunities like hotels, apartment syndications, and even invest in some tech startups, right? Or crowdfunding campaigns. But I cannot personally benefit from those opportunities or work on them directly. So I cannot be the person who's running the startup and then uses my EQRP funds to fund my startup. That is a direct beneficial benefit of that money, and the IRS says no to that, okay? So you can't do that. Or you can't use the money in your EQRP to buy your next dream home and then live in it. No. But you can use it to buy a rental property that renters are going to live in, and you just get passive income from. So there are rules. You can't buy a house and move in your family and personally benefit, but you can definitely buy a rental, get some passive income, and put that passive income back into the EQRP and buy some other things and keep doing it over and over again. So Kiana, your point about professional investing and losing money, it's really on you to find good deals. It's you who has to do the due diligence on the investments, checking the background history and expertise of who you're investing with, making sure the asset is a real asset, and any other things that you need to do to ensure that your opportunity is a real opportunity, okay? Because EQRP takes no responsibility for the investments that you choose to invest in. That is purely a personal decision that you have to make. Joe, oh, and Joe answered it in the chat too, if you want to know. So I tend to share investment opportunities on my email list and with my friends and family as they come up. But I'm not the only source. You can subscribe to crowdfunding platforms to see what they have coming up. And Fundraise is one of them. WeFunder is another one I've seen where you can have these opportunities come up and potentially put some money. So Marcia said, wait, you paid no taxes? Joel said, absolutely. So I'm not paying taxes today. And as far as I'm concerned, as long as I keep investing, I'm not paying taxes tomorrow either. We're going to die trying not to pay taxes. So let's keep going. So Shamika said, how do we get started? So I'm about to drop this link so you can set up your appointment with the EQRP team and go ahead and get started to talk further about how you can leverage this strategy for you today. I'm also going to, I told y'all I have goodies. I have a lot of goodies. So I'm also going to drop a link to have a free chat with me. Okay. If you're interested in hotel investing, if you're interested in real estate funds and you want to be able to invest in multiple real estate opportunities at the same time, I am currently in the process of raising money for a real estate fund that I'm going to do some dedicated webinars for, but I'm going to give you the link to talk to me directly first, okay? Nasima, hey girl, that's my girl from California. Yes, Nasima, ask questions. So if you want to come off mute, if you're still here, Nasima, you are always good at speaking, so you can come off mute and ask your question on the mic, but I'll leave it up to you, boo. Drop it in the chat.
No, I have questions.
Okay.
Because this is actually the first time I heard about this. I legitimately thought that this was about self-directed IRAs, which I'm a little bit more familiar with, but this is the first time I've heard about it as a 401k. So my question is, because I'm an index fund girly and I like my low fees and my market returns. What is the benefit for this, for moving this over? Like, for me, I would look at it as a way that I can do deal exclusively with you, Aquania, because I'm always trying to figure out how to do that, right? So what is the benefit? Because I do have some funds that I could roll over from an old 401k. What is the benefit of moving it over here? Because I don't know, when I hear that there's a team, there's a lot of people involved, I automatically think high fees. And so I wanted to know, like, what do you think? Because my funds I'm very protective about that account because I have a 0.01, fee on that. What are the benefits of moving that from that account over to investing with them?
Yeah, if you don't mind, Aquani, I'd like to answer that.
Oh, please, you're the expert.
Perfect. So really great question. It's all going to come down to your ability to take risk. Everything that you're investing in outside of your fixed income is speculative. So you think about the real estate or the venture capital and private equity out there, you look at all of the different types of industry like tech startups, manufacturing, hospitality, storage units. They all have their risk, but they also have their reward. They have stability. They have much higher returns than what you're experiencing with your fixed income annuity. And so sometimes you do have to pay to play a little bit. You think about what you're being offered, it's not as performing, so to speak, as some of these other opportunities. If you look at some of the opportunities that are in the private equity space right now, there are opportunities to earn anywhere between 15, 20, 25, 30% annually. There's even exit events that will 2, 3, 4, even 5x your initial capital. And I know that that sounds absolutely bizarre and crazy to think, wait, I can put a 5x multiple behind my capital that I invest in these types of investments. The answer is yes. And of course, it does come with risk, right? You're investing in venture capital. Maybe there's a startup that is offering those types of opportunities for return. So you do have to do a little bit of due diligence. And fortunately, behind the scenes, there are operators that know what they're doing. You think about maybe a manufacturing plant and the operators that are behind the scenes actually building up that manufacturing plant, making it, getting it to the point where it's scaled at maximum capacity. And then it becomes an attractive asset for a bigger company to buy it out in those moments. And that's what a lot of these private equity companies are working towards. They're building something great so that some other company can come and absorb them. And it's in those moments that you see those transactions with massive multiples. And so investors walk away with unprecedented returns on their investments when you compare it to something like maybe a fixed income annuity or a high yield savings account. So you do have to just weigh the risks. And of course, diversification is a great strategy. You want to have some positions in high risk, high performing assets. And then you also want to have some low risk, more low performing assets to help balance out your risk tolerance. So it's a really big, it's a simple question with a really big answer. And it's going to come down to how comfortable are you self-directing and placing your funds in these types of assets? And sometimes all it takes to actually venture out and invest in those assets is learning about it. The more conversations you can have with people like Aquania or your peers or your investment communities, where you can ask hard questions, kind of like this question you've asked me, you start learning more and more about the due diligence process and who are the operators behind the scene. Who are the fund managers that are raising the capital? The more you look and the more you poke and the more you realize, you actually start feeling more peace of mind that, oh my gosh, this is something that I want to invest in. This is an asset class that would have been totally new to me a year ago, but it's something now I understand completely and I want to invest in it. So hopefully that was, a little bit of a little bit of a good answer for you to kind of walk away with feeling confident in taking the plunge.
Okay, so I know Nasima, and I'm gonna hit the nail on the head. So Nasima, it goes back to kind of what Kiana said, right? Like it's not gonna perform the same as stocks because it depends on what you're invested in, and your investment is going to determine your return. But full transparency, there is a fee to start in EQRP, like to just get it going, one-time fee. And then you have your annual maintenance fee so that they take care of the tax stuff for you, and make sure you continue to smoothly have the support you need. And then as the person who has an EQRP, they also have a community similar to Facebook, but it's Circle, so it's off Facebook, and we can network with other investors, learn about investment opportunities, because again, if you don't have an investment, your money just sits in the bank, and that's not good for anybody. So I have tapped into our network to find investments. EQRP also offers webinars on investments that they come across. And so you have the potential to earn more than the stock market, but it just depends on your deal. And so what I would say now is do not put all your eggs in this basket. I didn't do that. I'm not telling you to do that. I invest money that I was willing to put into hotels, apartment syndications, and businesses in the EQRP, but I still have money in the stock market. And I still have other streams of income that I'm leveraging to build wealth. So I'm not going to tell anyone to move everything and trust the EQRP for all their asset success, because that's just not smart. So I'm gonna keep it real. And I know that's what Nasima was looking for, is like, how much is it gonna cost me? So Nasima, that's a short and dirty answer to that question. I did drop in the chat a link if you want to talk about the EQRP specifically for you and how you can use it, because they will help you figure out if this 401k from your old employer is an option, or if this IRA you have sitting over here is an option, because there are rules. But they've been able to walk through almost anything. And I will even tell you, in the past, when people have had multiple options, EQRP can kind of help you figure out which one's the easier option if you have a time crunch for your investment deal. Shamika, you said you're having problems with the basics, setting up your solo 401k. Do you want to elaborate on that at all? Maybe there's a way that we can help you. Do you already have one and you're struggling to set it up with whoever it's with? Or is there something else that we can do to help?
So I tried to set one up with E-Trade, I believe, but I don't know what to do other than filling out the papers, sending them in. I don't even know what the next steps would be. I know this is just not my wheelhouse. This is not my lane. So that's the part where I'm stuck. I don't even know how to fund it. So it's just sitting there right now.
For sure.
So
Yeah.
I have a question though, Joel, before you answer, can you also elaborate how all solo 401ks are not created equal, and how the E-Trade might limit what she can invest in? So
Yep,
thank
you
you.
hit it on the head. Yeah, Aquania really hit it on the head for you there, Shamika. You know, the solo 401k that E-Trade is providing you, it will allow you to invest in the assets within the capital markets that you prefer. So it's really just a tool that allows you to select what specific stocks, mutual funds, bonds that you want to hold within that solo 401k. I don't think that E-Trade plan allows you to invest in the alternative assets like we're talking about. It may, I could be wrong, but that's the unfortunate side of just having a solo 401k. You actually have to figure the whole thing out on your own. And that is by far the hardest part for anybody that is exploring the solo 401k. So that's why we designed more of the turnkey solo 401k, if you will, and we call it an EQRP, because we walk you through the whole process. We establish the plan. We make sure that it's structured, like I was mentioning, so you can invest it in all of the alternative assets that you want. We help you with compliance. We help you with the investing. So the whole process is turnkey versus probably what you're trying to navigate with E-Trade. And no knock on E-Trade, but I think it's indicative. It should not be as complicated as what you're experiencing to take your qualified funds and invest them in the alternative assets that you want. And unfortunately, it sounds like that might be what you're experiencing right now. That's why we developed the EQRP.
Just to follow up from that, my husband has a 401k from a previous job that we need to roll over. And I was told if I go to E-Trade and set up a solo 401k that he can, because he's my husband, he can set one up under me and roll that money over. But I don't know how to do any of that. Like, right?
For
So
sure.
I'm glad I came here, because if this is a program that can help me, I don't want to say help me. I mean, I really want someone to do it for me, because I'm
Yep.
like the previous, I think someone asked a question, how to, I don't want to lose his money. I don't want to mismanage mine. I really
Mika,
don't know what I'm doing.
you are like the case study. This could not have come at a better time. You are experiencing the problem that people face, and we are the solution. We will do it for you. And I think Aquania can attest to that. We'll do it. Like, we'll make sure everything is done the right way, and we show you how it's done. We walk you through the entire process. So you're not like left in the dark. We don't want you to feel like you're left in the dark, but you walk away realizing like, oh my gosh, thank you for doing it all. And then secondly, thanks for showing me like how it actually functions. And now I can just go invest with Aquania and she'll do all of the dirty work with the investment. And truly the idea is that this is a passive opportunity for you to grow your retirement plan just in a better way.
Absolutely, absolutely. Thank you, thank you, thank you. And so, Shamika, just to reiterate, like you still got to have a deal, but you can put it into the EQRP and then easily transfer it elsewhere. And I do love the fact that the company that we work with, there's no wire fees when you make your transfers, and there's no fees when you get money transferred in. They're like no fees. Which is also a shocker because when I first started in 2020, the company we did it with, they did charge for wire transfers. And that's the easiest way to get your money into a deal is a wire transfer. Now I have one less expense that goes into me investing. So someone asked, what's the best way to set up a reoccurring deposit to the EQRP? So honestly, it depends on what you want to do. I have my EQRP account tied to my business bank account. And when I have additional income and I'm ready to make a deposit for the tax deduction purposes, I will just ACH transfer the money into the EQRP. And I didn't emphasize this, but that's another benefit. The contributions you make in a calendar year are also tax deductible expenses for you and or your business, depending on how you file your taxes. And correct me if I'm wrong, Joel, but you can do up to 67,000 now if or something.
So to 2024, $69,000 for
69.
under
Okay.
50. Yep.
And if you're married, the spouses can both do 69,000 a year. So if you're both in your business and you had a significant year, and you want to put 69,000 aside for the both of you, you can do that and get that tax deduction. In the past, putting money into the solo 401k or EQRP has reduced my tax bill by 25%. Now I'm going to be transparent with y'all. I have not gotten a refund in a long time. And that's just because I'm happily making more money between my businesses. And at the time I was still working. So I was making more money. So I don't mind when I have to pay more taxes, but I'm going to lower that bill as much as possible. And so I literally meet with my CPA and I tell him to give me the number. How much do I need to contribute in this calendar year to reduce my tax bill? And last year, my EQRP contributions reduced my tax bill by $10,000. And the previous year, about 25K. And I mean, not 25K, 25%. And it doesn't require me to do a lot. One year I had to just make, I think it was a $4,600 contribution. So you don't have to make thousands and thousands and thousands and thousands of dollars in your business for this to make sense or be possible. But if you have a business that is making money, you can take some of that revenue and give it to yourself in your retirement contributions. And then the IRS gives you a tax deduction on top of that. So there are things that make this even more beneficial for those who have a side hustle. And you don't have to be a full-time entrepreneur. You can have a side hustle and be putting money into the EQRP. You can have a 9-to-5 and a side hustle and roll over money into the EQRP. Rollovers have no limited amount. You can roll over $1 million, you can roll over $100,000, you can roll over $20. But annual contributions are limited to $69,000 a year. But if you are over 50, you can even do catch-up contributions, I think, which gives you an additional amount of money. So please keep that in mind, especially for entrepreneurs who have had a really good year and you're looking for more ways to reduce your tax bill. That's an option. And here's another tip. If you are someone who always files an extension, and so you actually file your taxes in October and not in April, you have until October of the next year to make contributions on the previous year's taxes. So what I mean by that is I'm still filing my taxes. I file every October. I tried to file early, and every time I did, I had to amend my taxes. So I stopped filing early because I just didn't like having to redo them. So what I do essentially is every September, the CPA tells me, what is our situation? Do we owe or do they owe us? As I said, I haven't had a refund in a while. When the CPA tells me that we have a bill, then he gives me the number that I have to contribute to my 401k or EQRP, and I write a check. And that contribution gets to go against the 2023 tax bill. Does that make sense? Do y'all hear what I'm saying? Because I know that was a lot, and some people don't get the IRS like I get the IRS, but I don't like messing with the IRS. I like to keep my sanity and my peace. So I try to minimize my tax bills as much as possible, and I leverage legal ways to do it. And so I'm depositing up until October 15th. Okay. But I'm doing it strategically. So I'm using the EQRP to invest in alternative investments. I'm also using it to lower my tax bill. And I'm also using it to lower my headaches, because without a custodian, I can literally freely control my money. Somebody asked, is there a minimum amount to get started? The answer is no. Like I said, roll over $20 or roll over $200,000. It is totally up to you. Okay, so let me see if we have any other questions. Somebody asked, sorry, I apologize. I used to work for the government, and I used to hate when people use acronyms all the time, and I know what they were talking about. So I apologize, but EQRP stands for Enhanced Qualified Retirement Plan. Enhanced Qualified Retirement Plan. So it's not a new thing or a unique thing. It's just an acronym thing. I apologize. But if you go on the IRS website and you look for qualified retirement plans, this is one of them. They just added an E because it is enhanced, it is extra, it's enriched, it's awesome. Okay.
Love it. Aquania, I have an idea.
Oh, my schedule is cray.
Aquania, I have an idea.
Okay, go ahead. See, my schedule's filling up fast. Y'all trying to get on the calendar, and Friday's already booked. And next week, I am on an island somewhere. I'm telling you now. So still get your name on the schedule. If I can't talk to you this week, I will talk to you as soon as I get back. But me and the island have a date, and I will be there on time. So don't worry, guys. We will hang out as soon as I get back. Joel, what's your idea?
Okay, so for anybody that would like a PDF summary of everything that we talked about and more in detail that you can go back and read through and maybe share with your partner or anybody else, I have a QR code that's tied specifically to Aquania. Let me show this to you really quick. So this QR code, if you've got your phone, scan it really quick, and it'll actually take you. In fact, I'll go back to it, but I want to show you where it's going to take you. It's going to take you to her landing page. You're going to see Aquania there. And this is an opportunity for you guys to actually enter in your information, and we'll email you our book summary. Like I said, it's 15 pages, and it's got all of the content written out really well for you to digest and ruminate on. But again, this is the QR code that you guys are welcome to scan. Take a minute. I'll leave it up here on the screen. Use your phone, take a picture of it. Feel free to tack it onto your phone, and we can go from there. And I would love for everybody to have a chance to have that book summary, and this is the way to get it through Aquania.
Mm-hmm. And that book is good. Like I have a copy, and I go back to it from time to time, and then as things change, they do make sure to update. So I like it. It's a good resource tool, and it also reminds me of all the other things I could be investing in. So please know that it's free. There's no cost. They will send it to you. They have tons and tons of copies. So it is. Oh, this was fun. This went by so fast. I just lost track of time, and I try not to keep people too late, but I will stick around for a little bit longer for anyone who has specific questions for me. And just know that because you are in the room, you will get the recording. So we will make sure that you have access to this within 24 hours, so you can rewatch it, enjoy with popcorn, and wine, whatever is your take or pleasure. But I am definitely here. And like I said, get on the schedule, folks, because when I get back from the island, it's me and you, boo. So let's talk about it. Let's talk about it. I also dropped the link if you want to know more about the real estate fund that I'm currently raising funds for. Let's hop on a call and talk about it. I'm really excited about this opportunity, and I will have a dedicated webinar to it. But right now, I'm just setting up one-on-one chats. So feel free. Thank you so much, guys, for showing up and showing out. As usual, you asked amazing questions, and you made Joel feel so welcome. So please, if you know how to do the reactions at the bottom, give Joel a round of applause. Just clap the hands for him and being in the room tonight. Thank
Bravo,
you, Joel.
Joel. Bravo,
Yes.
Joel.
Yes, yes.
Bravo.
And David, I want you to drop in the chat. Please send me your email address because you were the first to show up and show out. And I love new people and early arrivals. So I have a $25 gift card that I will be sending your way. You can use it wherever you like on the internet. It will be Visa and accessible. So please text me back. I just sent you a direct message to give me your email address and you will have that $25 gift card. So
I'm thinking of some new glasses, maybe. Get a new pair of
Yes.
glasses.
Yes, that sounds like a great idea. Anybody who has questions, just know that you can always text, call, or email me. My number is at the bottom of all of the emails that I send, and it will definitely be at the bottom of the replay email for this class. All right, so David, don't forget, because I want to make sure I get your email before we hop off. But thank you so much. And that is the end of our formal discussion.
Thank you.
Thank you.
All right.
I'll see you
Aqua-
later.
Aquania. Okay.
Thank
Ciao.
you. Have a good night,
Ciao.
Ciao.
everyone.
Ciao. Am I gone or am I there?
No, you're still here. You're still
Why don't
here.
should I just tell you what it is? It's
If
very
you want,
simple.
okay.
FQ Emporium.
Oh, Emporium. That's not a word I use every day. So F is in Frank, Q is in Queen.
That's it.
Okay,
Emporium at gmail.com.
okay, so hold on a minute. Did you see the message I sent you? I'm gonna send this back to you. You tell me if this is right, okay?
Okay. Yep. Little f, little q, emporium at gmail.com. Yes.
Okay, you got
Very
it.
good. Very
All
good,
right.
Aquania. Okay, thank
I
you.
know how to spell when it counts, and I know how to count money. Those are my two best skills.
Beautiful.
Got
So
it.
what should I do now? Should I exit?
You can hang up or you can hang out, but I will send you by email the gift card. It'll come from
Okay.
giftcards.com.
I'm gonna let the girls, hang out. Okay.
Okay. Thank you so
ciao.
much.
All
Good
right. Ciao.
night.
Good night.
Bye.
Bye.
Hey, Aquania,
Yes.
when you were talking about when your deal cashed out, like with regular, does that money go back into your account, like for retirement funds? Like you're not spending that money.
No,
like that
I'm
money
going,
is just re-accessible for other
yes.
deals,
Yes, I
right?
am going.
Yeah.
I'm going to put it into another deal, but I'm not going to access it. However, we kind of skipped over the EQRP loan thing too, but that's a game changer for entrepreneurs who need access to capital and the banks are not working with you. So one other benefit is if you have 100,000, okay, let me backtrack. If you want to borrow money from your EQRP, which is not something you can do with self-directed IRAs, you can borrow 50,000 or you can borrow 50% of your EQRP balance or up to 50,000, whichever is greater, right? Or whichever is the max. 50,000 is the max. So basically, if you have 100,000 in your EQRP and you want to borrow 50 for your business, for your vacation, for an investment, you can. And that is a loan. So you won't actually have any taxes on that money either. But what you do is you fill out a promissory note to yourself and you say, I'm going to borrow $50,000 or 50% of what's in your EQRP, whichever is the max is 50. And then you will pay it back on your term. So you can pay back your loan in quarterly or monthly installments, and you have up to 5 years to pay it off. So if you break it down into 5-year payments, it comes out to like 3,336, something like that, a quarter. And then as long as you just pay yourself back, then you're all good with the IRS too. So that's another benefit we didn't highlight very much, but yes, whenever you have a deal, you will use money in your EQRP to pay for it. And then whenever you make money, it should go back into the EQRP too. So my monthly distributions from the apartments or the car wash, I'm not spending that money to live. I'm actually saving it up to invest in another deal. And then whenever something cashes out, it goes back into the EQRP. That's how I'm protected from having to pay taxes, because I don't take personal ownership of the money and use it for myself. Does that make sense?
Yeah, that's perfect, Afania. Also, you know how 401ks, you can do the same thing. However, if you're separated from your company, you have 60 days to pay that back. Are there any restrictions for this account similar to that?
5 years, that's the restriction. That's the most time you can take to pay back the 50K. That's it.
Got it. Thank you.
That's it. So it definitely can help you with growth or just leveraging more money. And like Joel said, when you take the 50K loan or half of what you have in the account, whichever doesn't exceed 50, you can do that for personal reasons too. So you can borrow it for yourself to use, not just your business. So you can use it on your business, you can use it for yourself, as long as you pay the loan back, and you have to do it within a 5-year period. That's it. That's it. Do you have to have a separate LLC for this? No, you do not. I have chosen to put my EQRP in the name of my business, but there are people who have it in their name, and you become the trustee. So as the trustee of the EQRP, you control where the money goes or what it's invested in, but you do not have to create an LLC to have an EQRP. In fact, once you create it, it is a trust and it operates like a trust. So when you do invest in deals, you would be investing as a trust, and you are the trustee of the trust. I hope that's not too complicated, because Joel is gone, and that's the best way I know how to explain it. But no, do not create an LLC just for this. Nope, 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 nope. Any other questions? Ladies, Emma, Kajal, test. We gonna get to the bottom.
Yeah.
Is
Test.
this, I mean, because you know, I'm a startup, like I'm very new. I mean, is this something that I can do, not having like the what do you guys call it? Not income, having the success, the monetary success that you may have? Is this something?
When I started my EQRP, I wasn't making this kind of money. I just wanted to invest, and I leveraged 401k from government job to fund it. So yes, you can roll over money from wherever, whenever, and however much you like. That has nothing to do with your business's income. Now, to get the tax write-off for a contribution, you do have to have made income in your business. You can't just contribute money and then tell the IRS, give me a $10,000 deduction, but you have no evidence of where this $10,000 came from. So when you want to do contributions for the tax deduction purposes, you definitely have to have proof of where the income came from. But if you have your husband's 401k from a previous employer, the money's sitting there, you have an opportunity you want to invest in, you can move that money over, and it doesn't require you to have made $1 in your business to do that, for sure. So that's really it.
You know, I'm still worried about these fees.
I know, girl, but I have my lanes. This is my stock investment lane. This is my real estate space lane, and I just keep them separate. And I do deduct any expenses related to my EQRP, which there aren't very many, are tax deductions. So those come right off the business expenses as well. Belinda, go ahead, girl. What's your question?
Mhm.
Ask
Good
Nassim, but
evening.
Damien set up one recently, so he's also invested. Go ahead.
My camera's in the shop on my phone, so I couldn't do the QR code thing. How would I still get a copy of the PDF transcript?
Oh, the QR code. I dropped the link. I'll drop it again. Are you just trying to set up a meeting with the EQRP team? Because it's in the chat, but I'm gonna drop it again because I don't want you to have to search for it. But here's the link to set up a meeting with the solo 401k EQRP team. Did you also want the link to talk to me about investing?
I have that, but
Okay.
didn't he say something about the QR code would take you to a page where you could get the PDF of this conversation?
The link I sent you will get you to the book too. Yeah, you can get
Oh, okay, okay.
Yeah. So either way, just click the link in
Okay.
the chat and you'll get the book. And they send those out pretty
Okay.
quickly, so you'll be fine.
Okay, thank you.
You're welcome. Thank you, Belinda, for coming. Oh, tell me, Belinda, how'd you hear about the webinars? Email list, social media, or something else?
Google, email.
Good job. Good job. Emails work. I'll be trying to tell y'all, emails work. And then y'all know that's one of my business, email marketing. Emails work. All right, y'all. Well, we are going on an hour and a half, and I want to respect your time. But you know where to find me, guys. I'm super, super open to extending this conversation with anybody who wants to extend it with me. So please set up a meeting to chat with me after this call if you want to talk more about investing, personal finances, or getting your money right in 2024. I am here for all of it. Like I said, if you can't find a meeting time for me tomorrow, feel free to meet with me after I get back from the beach because I will be well rested to have a great conversation with you. Oh no, I'm not. But good night, y'all. Thank you, thank you, thank you, thank you.
Good night.
Good night. This is awesome.
Good, yes, thank you
for
so
the
much.
opportunity. Thank you so much.
Of course, thanks for the questions. Bye.